Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the November 20th market wrap-up for November 21st. Let's go ahead and try to do this fast. S&P 500, extremely bearish day today. As yesterday, we took out the lows of the rally attempt, officially killing it. And today, we broke down on extremely strong volume. The big volume pickup, some might want to say capitulation. Is volume higher than in October and September? No, then no capitulation. I want to move immediately on to the Dow Jones Industrial Average and show you the same thing. Breakdown on very strong volume, 5 and 5%. Since November 4th, the Dow Jones Industrial Average is down 21%. Let's go ahead and move on to the NASDAQ 100. Big breakdown on very strong volume. Very nasty 2 days, down 10.32%. Since November 4th, down 24.8%. Interesting. There's the NASDAQ. Same thing. Breakdown on extremely strong volume. Since November 4th, down 26%. Curious. There's the S&P 600 and another big volume breakdown. Since November 4th, down 28%. Russell 2000, same situation. Massive breakdown. Down 29% since the election day. Is that good? And then let's take a look at the New York Stock Exchange. And as we see the same thing from November 4th, down 26%. Breaking down on strong volume. This is not good. Period. What is good? This is good. The CRB index is at 230 after at one point hitting 473 at the highs. From the highs of 473 to 230, it's now down 51%, which means that a lot of things have pulled back to help ease the pricing pressure at the stores and at the gas pumps. And that can be seen in oil. Oil is now down to $49.65 from the highs in July. Let's see if we can get over there. Sorry. Around 146 that it shows here. From these highs to the lows, it's down 65%. In 4 months. In a little over 4 months, oil is down 65%. Gas is now down below $2 in 23 states. I'm sure it's probably 24 to 25 states after today's 7.88% loss. And I'm sure it'll continue. Let's look at gold, the commodity that was supposed to go to $1,400 during this bear market. As you can see, everything is stinking up the joint. From its highs in March to November, it's still down 25%. Nice little consolidation pattern, as you can see right here. But lower highs and lower lows equal probably more lows. Now let's go look at silver. Not good at all. From the highs of silver to now, it's down 56%. And it just continues to be bad news for that. Now let's look at the dollar that was supposed to collapse. The dollar, ever since it's broken out of the flag pattern here, continues to rally. So even from its breakout to about now, it's got about a 2.3% gain. And since it took over the 50 and 200-day moving average on August 7th, it has an 18% gain. The 18% gain now also has an up day today with green BOP. Now that BOP is green, either it will continue to go higher on green BOP, which would be very, very nice, as you can see. A complete change of pace since 2002 and 2003, even when it was falling. But not only would the green BOP be good, but higher and higher dollar would be just excellent to see, because I keep hearing how everybody says the dollar's going to drop like a stone. And I just hope that isn't the case. And if you weren't listening to those guys, and if you bought the dollar when it went above August, you're up 18%. I'm not sure exactly how the futures work on the dollar, as I personally have never traded the dollar with the futures. But I know my friend, Chris May, market speculator, who is my tag team member on my website. I could not do without him. His futures account, that I have to admit, it's not real money, but it's in a tournament. He is in first place with a 236% gain this year alone. So, obviously, futures can work when you're on the right side. It sure is nice to be on the right side in this kind of market. Something else I want to show you is the volatility index, the VIX index. It closed at 80.86 today, which is above the old closing highs of 80.06, but not the old highs of 89. It hit 81.48 today. So, until we see a closing high above 89.53, I'm not going to call a bottom. What I would like to see is, hopefully, if we're near a capitulation level, volume would pick up even higher tomorrow, possibly above the September and October levels, as we sell off possibly another 5%. Though that does sound very ugly, it still would be very good for the market for trying to find a volume. Now, yesterday for Part 2 readers, or Part 2 viewers, I showed what capitulation would look like. And since I forgot to show Part 1 viewers, I want to show it. This is one of the stocks I'm short. I'm short from right here, so the people watching this video should know that I have a 67% gain in this. Not only that, I want to read off the percent returns I have in shorts from May to November. 44%, 65%, 49%, 72%, 52%, 51%, 66%, 69%, 50%, 67%, 74%, 88%, 77%, 65%, 55%, 80%, 59%, 46%. And there are still others that I haven't mentioned. So as you can see, there's been a lot of shorts that I've given you that have made tons of gains. I'm almost up 40% now in my top account, and that's only with 10% of my account working. 20%, I guess you could say, with margin. So with only 20% of my account moving, that's a pretty good return. I have subscribers up 60%, 80%, and even one declared yesterday he is up 116%. He is not up necessarily by shorting my shorts, but by just following the direction of the market. He is short Amgen, for instance, which is just now breaking down with DNA. And he's been short, whatever he's been short, I don't even know. All I know is up 116%. He's been around since 1987. There's no reason to doubt that. I will believe him definitely on his word, because I know he is a smart investor and goes with the trend just like me. So his 116% return is amazing. My 40% return stinks. I need to make at least 50% to cover my cost of living out on Maui, and I'm not doing it yet. So this, along with last year, barely getting over 50%, has not been the past good 2 years for me. It's been very poorly managed by me, and that's because I haven't had a chance to load up on any long or load up on any short, because the longs were too far deep into a rally that started in 2003 without any 20%, much less 10% pullback, I think, on the Dow Jones Industrial Average. And so it was impossible for me to be brave enough to go super long anything besides AFSI in the beginning of 2007. After AFSI in 2007, not only did not much show up, but the only other one late in 2007 was APPY. DGLY and PDO were the only two that worked in early 2008, and I for sure wasn't going to load up on either one of those. And the shorts, they fell down too fast. This has been an extremely fast bear market. This has completely caught me off guard and has not allowed me to load up on shorts, and that's where I messed up. If I was 100% short, I would be up well over 100%. If I only have 10%, 20% on margin, up 40%, whenever I was only up like 10% in the summer. In the summer I was up 10%, now I've been up 30% the past 3 months. So it's been a good 3 months, but like I said, other subscribers have done a lot better. I'm going to go ahead and wrap it up there. I'm going to take a quick look at the semiconductor index. Very ugly. I want to see how much it's down from its highs in 2007. Tech stocks down 68%. And really quick, I want to show you how much the NASDAQ is down from just 2000. From whenever I remember it making highs around 5,100. It's now down 72% still. So it's been an ugly 8 years, and I gotta admit, I have at least a 450 to 500% return from 2000 on. From 1999 on, it's over 600%. And when I look at my 600% return to the 72% loss during that same amount of time, even though that 600% return is very weak in my opinion, because in 2003 I should have returned 1,000%, I do believe in my mind, but I had over half my money in the poker tables and gambling on sports. I messed up, and my father died in May of 2003, which really screwed me up emotionally and gave me a massive drinking and semi-drug problem during that year. And even though I made money and was on the straight and narrow, that little blip caused me a lot of money. By 2004, I was back to being normal. 2005, I started mytrader.blogspot.com, and here we are in 2008 at bigwaytrading.com, making good money on the short side, waiting for a bull. But whenever you only have one new high, a put call only at 1.21, an E for the New York Stock Exchange, E for the S&P 500, E for the Dow Jones Industrial Average, D for the NASDAQ, with 31% of bulls actually increasing from 20% and 44% bulls actually decreasing from 50%, you don't have the right makings for a bull market just yet. So it's going to take more time, but let's try to stay positive out there. This is Joshua Hayes at bigwaytrading.com. Aloha.